Hey everyone, welcome to the live stream. It is the evening of the 27th of May. We had a great day on Wall Street where we saw stocks really rise today. Technology stocks really led the way with companies like Nvidia just going up, really incredible rise. Uh, Broadcom followed them. A lot of semiconductor companies were there to really go up. Apple had a good day for a change. Microsoft had a very good day. Microsoft's having a good year. Google had a good day. Meta's having a good year and a very good day today. So just a lot of green, a lot of things to be happy about as an investor. A day like this reminds you want to stay invested in the market. You don't want to try to time it too much and get completely out because you miss a day like this. If you miss a day like this, it's pretty hard to take because again, Nasdaq was up 2.5%, and you could have missed out on 2% return on your money in one day. So you want to stay in the market as much as you can, and try not to time the market and get out and stay out. Amazon was also up 2.5. Tesla, man, it roared 6.94%, almost 7%. That is incredible. So really good day for stocks. The Nasdaq was up 2.47, S&P was up 2.05, Dow Jones up 1.78. Russell, the small caps up 2.48, very good. That looks great. So just a lot of stocks work today. And when we look at the news that came out, the big news to lead off the day was the U.S. wasn't gonna go after those sanctions, or excuse me, the tariffs on Europe. And taking those tariffs off the table really caused upward momentum for stocks. And in addition to that, there was some positive news out of China, but that was enough. Stocks really just took off, and away they went. Now, after hours, Okta, the software company, reported earnings, and their stock is down 11%. We're going to take a closer look at Okta. I covered that in the morning stream, actually, and thought it was a sell in the morning stream because they're just another software company. And there's a lot of good software companies out there that have good valuations and very good fundamentals. So I thought there was better choices in Okta, and boy, 11% down, that is not a fun day at all. And other news, I think that was the big news. Now for tomorrow, it is going to be a huge earnings day tomorrow. We have Nvidia after the close. There's a watch party scheduled on my channel for what will be 4:15 Eastern. And if you can, tune in. And if you can't, maybe you can watch it later. But I wanted to kind of review the earnings with everybody, kind of go through that and see how the market reacts to the earnings. And along with NVIDIA tomorrow, Salesforce is going to announce their earnings. They're a pretty good sized market cap, 265 billion in market cap. And Synopsys, which makes software for semiconductor companies to test out their semiconductors, they're going to announce as well. So it'll be a big day tomorrow. And NVIDIA, where will the stock go? My estimation is if they announce good earnings and they have good guidance, the stock isn't going to go anywhere. I think it's already rallied quite a bit. But if there's any sign of weakness, if there's any sign of a pause in the CapEx spend for data center, this thing's going to drop like 20%. And that's what happens with NVIDIA. They usually announce last couple of years, actually last couple quarters, I should say, after they announce, even though the earnings look good, the stock sells off. So we'll see what happens tomorrow. I'm going to tune in. I hope you tune in with me. So that's tomorrow. But today we had a couple more announcements from little smaller companies. Heiko, we'll take a look at that one. Okta, we'll take a look at that. Sociedad Química y Minera de Chile, we'll take a look at that one. Box announced, and they're doing really well in after hours. So really small caps. Small caps did well today. So we'll take a look at those. Before I jump into those stocks, let me check the chat. Looks like we have 11 people on the stream. I appreciate it very much. Let me cover something that is important. So there's been a number of people join the channel, and I appreciate that very much. If you could please get your information over to me so that I could get you access to the Discord, access to the investor calls. You'll get access to the content that I provide, the tools that I provide, like the valuation schedule, and that you can get signed up on the website just by going here, and you can get signed up. So take a look at that. Give me your email address if you already signed up so I can get you all those perks. If you're not a member, you can go to that button I clicked and you can get signed up if you'd like. So that is the channel membership. I think it's really going well. I really appreciate everybody that signed up. Now we have a really good number of people in it. We have a lot of people in Discord really collaborating, and I think that's really become something really, really valuable for investors. All right, so back to the action. Let's talk about some stocks here that announced. We'll lead off with Okta, which is having a tough night. Stock's down 12.84%. So what happened? What was the news out there? So the outlook, and I think outlook is a little tough. We've had a year where we didn't know if tariffs were going to really affect the economy. They were going to affect earnings, profits. And that's really weighing on companies. They're not sure if they're going to be able to grow as well as they have in the past. Now, Okta is in technology. Their software enables employees to log into systems and have a single sign-on into multiple systems that the company provides. So it's a very efficient application. It makes better use of people's time. So I think it's a good thing. Now, they're one of the originals and continue to be a standalone company. Other companies like Microsoft provide a solution. And of course, Microsoft is gigantic. They can provide that to customers, and their solution competes with Okta. And I think that's one of the threats to Okta's business is a lot of software companies provide what they do. These guys do it well. They're one of the originals, and they are desired by those companies that want best of breed. So their outlook is uncertain, so the stock is being punished. The stock is a good grower, growing 15%, and that's pretty good growth. It's a $2.6 billion revenue company, so that's pretty good growth for a company that size. The market cap of the company is $21.97 billion, revenue 2.61. So they're trading maybe about 6 times sales if you look at their market cap to the revenue number. When we look at the PE ratio, it's super high. I don't know if that's an error from the website. That seems extremely high, but forward PE is 39. The 39 seems a little high as well. So analysts think it is a buy, but it's priced too high. And I might agree with them because I think this stock has been working for year to date, but it's going to give up a lot of those gains because it's dropping, 12.8. So this is going to get trimmed down maybe to about 48% gain, which is still good, but you're really seeing volatility in the stock now. And over the past year, it's doing well. 29% is good. After today, it'll come down to maybe 17, 18%. So Okta, their guidance, they're getting kind of beat up for it. They might be doing the right thing and kind of guiding correctly, but boy, it's tough to take, huh? Especially if you're an Okta shareholder. But you're doing well year to date, so hopefully that's giving you a really nice cushion. The company has a terrific balance sheet, so that looks good. They have plenty of cash, so they're going to be all right. They're just a little expensive right now. You see the really run up on the stock. That's really what we're dealing with is the stock that's a little expensive, and maybe investors were thinking they were going to do far better than they're guiding. And if they're not going to guide with confidence, they'd rather just take the gain now and cash in that gain versus watching the stock go down over time. So that is Okta having a tough night. Let's move on to the next one, which is HEICO. HEICO Corporation, through its subsidiaries, designs, manufactures, and sells aerospace, defense, and electronic related products. and services in the U.S. and internationally. It operates two segments, Flight Support Group, Electronic Technologies Group. So they're aerospace and defense, industrials. They've been around for a long time. Hey, how you doing, Tony? NVIDIA will announce tomorrow, and we will cover it tomorrow, most definitely. Good to see you. Right now, we're looking at HEICO. This is a aerospace and defense company. They have a $38 billion market cap, so they're not quite a small cap, but they're not a medium cap either. They're in between. They have about revenue about $4 billion. They are pretty expensive. You look at price to sales, you're needing to pay about 9 times revenue for a aerospace and defense company, which seems a little expensive to me. The PE ratio is also expensive, 67.6. That's expensive. Wonder how fast they're growing. They are growing quickly. Nice growing company, 23% growth. Looks really good. And looks like they continue to grow, although the growth was really good in 2024, Q1, Q2, Q3, growth was really good. And then they've had kind of a halt to growth in Q4. And growth is slowing down a bit. I wonder how the stock is behaving. Is it flourishing or what's it doing? It's up 15% year to date. It's not bad. And after hours, it's down a tiny bit. And today it traded up 2.23%. Over the 1 year, it's doing well. So this stock's getting it done. 5 year, 175. What's there not to like about this stock? So it's getting bigger and its growth rate is going down. Now that to some extent is normal, right? The law of big numbers. As your revenue line gets bigger, it's really hard to maintain that percentage growth rate because you're dealing with bigger numbers. Let's take a look at their profitability and free cash flow. I want profitable businesses that are growing cash, and this company certainly is growing cash. That's a really nice growth on the chart for cash. Nicely done. And gross margins 39%, profit margin of 14. It's not bad, especially since they're growing. So that looks good, real good. So since they're growing nicely, 700 million, I would probably say this business is worth 14 to 21 billion plus or minus cash or debt. And when we look at their cash and debt, they do have some debt, about $2.19 billion of debt. So the business is worth 12 to maybe 19 billion, and they're priced well above that. I'm looking at free cash flows, and I'm valuing the company based on the cash flows they produce. And the stock's done really well. Investors have liked the stock, so they price the stock higher, making it not as attractive if you buy at a discount like I do. So overall, I think this one is priced a little too high. And congratulations to investors who have been in it for 5 years. It looks like you've been doing really well. So HEICO, I hadn't really looked at this company at all before, and they are a good company within the aerospace and defense company industry. Now, aerospace and defense has been doing really well because the expectation is that a couple of things is the U.S. is lessening the support of a lot of countries in Europe, and they're going to have to build their defenses, their armed forces. And that build out is going to create more demand for aerospace and defense companies. So that's a big catalyst. So I think that's one of the reasons why recently aerospace and defense companies have gone up. But before then, I'm not quite sure what would be driving a lot of aerospace and defense spend. I know the airlines have been buying a lot of airplanes and jet engines and maybe spare parts for jet engines because travel was really doing well in 23 and 24. That was a catalyst as well. So those were the two catalysts that were helping aerospace and defense. So HEICO has been doing well for a while, and their earnings came in. The stock's not really moving up or down. So anyway, so that is HEICO. Never looked at that company. This one here, this company mines minerals that would then be used in agriculture as a fertilizer. They're not going anywhere. They came down today a little bit, 0.82%, and then they're up a tiny bit in after hours after they announce their earnings. So I wonder why the stock's not moving at all. The stock's really depleted over the past year, and it had a nice run up in 2022 when everything else was kind of going down. This stock was going up, but since then it's really come down. It used to be priced above $100. Now it's at $32 per share. So it's really lost a lot of market cap, like $20 billion of market cap. So that is this company. They're down in Chile. This company could provide international exposure as well as exposure to materials. And materials have been doing well, specifically material companies that mine gold. They've been doing really, really well. Box is doing really well in after hours, 11.35. What happened? This stock, let's see, year to date, not doing much, but after tonight, I think it's going to be clearly in the green. Over the 1 year, it's 24%. This is a good investment. There is a lot of good software companies that have great fundamentals that are producing really good growth and cash flow. And maybe Box is another example. This one, you're getting it for about 4 times sales. PE is 24. We'll see how it's growing. This might be reasonable or might be a little high. Analysts think it's a strong buy and discounted by 11%. Now, the company is growing at 5%. Let's see how well they're growing free cash flow and profits. So free cash flow isn't growing a whole lot. I wonder what investors are excited about, because this isn't growing all that great, if you ask me. Free cash flow should be growing as you get bigger in greater proportion than even revenue, because you've already built out your business. You don't have to keep putting capital into it. You can just start reaping all that cash flow. So that one there isn't impressive. And when we look at gross margins, very good gross margins. Profit margins are good. Free cash flow margins good, but they haven't been growing it. Now, when I look at this company, it's a slow grower, and I maybe go about 15 on this, and I'd get to about 4.5 billion less debt. And let's take a look at debt. So they don't have any debt. They have cash of 790 million and 724 million of debt. So they don't have any debt. So I was at $4.5 billion of market cap value, and that's exactly where they're at. So if they really rally up 11%, they're actually going to be priced too expensive for me. There's lots of good software companies that are priced well, and Box is just one of many. I really like small cap software companies right now. So that is Box. Subio, very good to see you. Thanks for joining. Now, one of the members of the channel, he wanted me to look at Procore, and Procore is a software company. They do software, cloud-based, and they do a platform for, I think, projects for contractors, architects, engineers to collaborate on construction projects. Yeah, that's where I know them from. It's a $10 billion company. Revenue is 1.2 billion. So you're paying about 9 times revenue for the company. Forward P is 51. That seems a little expensive. It's a buy with a 16% discount. Now they are growing really nicely. That's good growth. I know that within construction, they're always worried that it's cyclical. You have really good periods of growth in construction, and then you have contractions. And you don't want to get caught when there's a strong contraction because stocks really sell off. I think Procore is going to be tied to the construction industry's volatility and cyclical nature. But so far, so good. They've been growing really well. When did they announce last? They announced on May 1st, so the data is recent. So that looks good. The growth looks really, really good. Now, this is specialty software made for just a few industries, principally the construction industry that is putting bringing together contractors and architects and so forth. And their free cash flow, 168 million. They have grown that cash flow over time. That looks good. And their gross margin, 81%. It's very good. Now they're losing some money. They're probably having to continue to develop the software, make it better, and have it do more things. And that doesn't get capitalized. When you do R&D, it gets expensed on your income statement. So that's why they're not profitable, even though they have very, very high margins. Free cash flow margin is good. It seems like this business is really growing up, and at some point is going to really start cranking out more cash and profits. For now, I would say this stock is, let me take a look at their debt to make sure their balance sheet's good. So we have 566 million of cash, and debt is only 71. So they have lots of cash, very good, 627 million. And they generate free cash flow of 168. So since they are a good growing business, I would go 20 times 168, and that's going to get me to 3.2 billion. And then that cash is on the balance sheet. So that's up to $4 billion. Wow. That's a good deal. 4 billion market cap. Maybe if I went 30 times, that'd be about 6 billion. So I'm coming up short on this market cap. We're coming up short because they're just not generating enough cash flow. The cash flow, I like the growth a lot. I think the growth is good, but the cash flow is not valuable yet. They have to, maybe when they get to like $1 billion of free cash flow, then their market cap is going to be worth 20-30 billion dollars. But until then, I think this stock's overpriced. Just not enough cash flow. They're not generating a lot of profit because they're probably spending a lot on R&D. Let's take a look at the income statement. So research and development, 325. See, these are big numbers. And they have to spend a lot of money selling the product, acquiring new customers. So these two numbers are well over $1 billion, like $1.1 billion. That's a lot of money to be spending just to sell, administer your business, and then do R&D. So a lot of the money is getting sponged away. Almost all the revenue gets sponged away in selling, general, and administrative costs, as well as research and development. So this one's going to be a pass for me. There's a lot of good software companies that I know of that I'm invested in that have better fundamentals. So in the scheme of things, I think Procore is a pass. It's a sell. And there's other software companies that an investor can invest in. For example, I think Adobe is a great software company that's growing not quite as high, but they're much larger. And they generate just tons of cash flow, and they've really been going up in value over the last month. So that's an example of a software company that I would rather buy than Procore. So those are my comments on Procore, and that review is for Matt M., one of our members of the channel. I really appreciate your support, Matt. Hopefully you found my comments interesting. All right, so moving along, let me take a look at the chat, see if we are, let me close an app out here. All right. And looks like I don't have any new comments. If you'd like me to review a stock and you're a member, go put it in the chat. I can review it. If you're not, a $5 super chat and I can review a stock for you. If you would like to know what kind of stocks I'm buying and selling, become a member. I publish member-only videos that cover that content, where I cover what stocks I'm buying and selling on really twice a week. I cover that, and we also talk about it on investor calls. So if you like that kind of information, become a member, and I'll gladly provide it to you. So thank you for asking. All right, so humming along. Tomorrow is a big day. Tomorrow, I think a lot of people are going to hold their breath during the trading hours. And it looks like, Tony, you had a question that I haven't commented on. What do you think of the amount of retail investor buying during these dips? Why do you think so institutional investors are going to huge cash positions? Well, I think institutional investors are getting back into the market. I think institutional investors have found themselves, they kind of are in a bad place with cash because interest rates short term are dropping really fast. So that is not going to look very good. Second, you have some really good performing stocks. So if you're an institutional investor and you went into cash, maybe 6 months ago you look like a genius, but now you're looking like you're behind big time because some super investors are just killing it. You have Michael Burry at 12.7, Tepper at 12.6, Tom Lee at 6.2. So if these institutional investors are sitting on the sidelines while these guys are killing it, these guys are going to see far more inflows coming into their funds. So Berkshire is a different animal, and you're right about Burry. I have to agree with you on Burry. Berkshire, I think the load up of cash is one. They did really well with Apple, so they want to get out of it. And I think Warren Buffett's kind of clearing the decks so that his protege, his successor, has a lot of cash to work with. So that's that case there. But Michael Burry did unload his portfolio. It's pretty incredible what he did. He sold all these stocks that he owned, including Alibaba. He sold Baidu, JD, Molina Healthcare, Pinduoduo, which he avoided a big loss in Pinduoduo today. HCA Healthcare, Brucker, BFC, Magnera, Oscar Health. Now, he missed out on a big game with Oscar Health, I would say. But he sold out of everything except Estee Lauder, and he doubled his position there. So he's into beauty, and what's Estee Lauder doing in the second quarter? Because here's the second quarter gain. Let's see. So for the first quarter, he did a 1.6%. Second quarter, it's lost value. So he's not doing all that well with Estee Lauder, but he has a huge cash position. So he's got a lot of dough in cash, and that's going to earn a little bit. Overall, he's already made a lot of money on Alibaba. He made money on Pinduoduo, and he got out of it in time because Pinduoduo got smacked today. So it's interesting. You are right. Now, those guys are trying to outsmart the market, and they may pull it off or they may not. Right now, the market's really surprising a lot of people. The rally that we're seeing is surprising a lot of the professionals, and they are probably taking a lot of questions from their investors going, hey, how come you're in so much cash? Other investors have seen their portfolios go up 18% over the last month and a half. So what are you doing? And if they're like, oh no, we're going to be in cash, are you going to wait for this to be like at 30%, return? So I think it is a difficult market to figure out, but in my opinion, we got to stay invested because you don't want to miss days like this, and you don't want to miss the last month and a half. It would really hurt if you left the market and now have to come back at the higher prices. So keep that in mind. When we sold off, it was a great opportunity to buy certain stocks, and I was buying all through this period, even as recent as last week, because certain stocks are being sold off. So we'll see. Estee Lauder seems like it's just a value play. Yeah, you're right. And I do agree on United Healthcare. I think United Healthcare, I think you're going to see a lot more super investors get into United Healthcare because there's just too much value out there for them to ignore. Let's see who's in it now. So United Healthcare has 17 super investors in it. You see the kind of respect and appreciation that company has. And some of these investors, let's see if I can, David Tepper's in it, and he added some shares. He's number 2 right now. He was number 1 for a while. And a bunch of other investors are in United Healthcare. And I'm willing to bet that this quarter in Q2, there's going to be a lot of buying. I mean, United Healthcare is like a perfect stock for like Berkshire Hathaway to buy. I mean, that's a value stock, a perfect value stock. And I think they're going to bounce back. I think that stock's going to be worth double its stock price, maybe triple in the next 2 years. So that's going to be a winner, and I'm buying into it. A lot of investors have bought into it. So it's not like, hey, just a couple of investors believe in it. These guys believe the business is sound, and they do a lot of analysis and a lot of research on these companies, and they've come up with, hey, we want to own the stock. So that is United Healthcare. Yep, I agree with you. Yeah, the beauty, the beauty industry, it's out of my, sphere of competence and knowledge and expertise. I mean, I get that ladies like beauty products. I can't tell you which ones are good and which ones are bad. I could just say that, hey, their products tend to have good margins. They tend to be heavily promoted, have celebrities behind them, and all that good stuff, which I'll gladly admit I don't really get. So I'd rather stay out of that industry and go to industries that I believe I do have, some knowledge, some experience with, and have a knowledge advantage when I go invest in those industries. All right, so we are cooking. We got 24 people on the live stream. Thanks, everybody. It's good to have people join a little late in the day. You're probably winding down, trying to figure out, all right, how can I get my money to work at night? Do you ever ask yourself that question? I've been asking myself that question for 30 years. I want my money to work all night. I want it to compound. I want to experience the miracle of compounding an investment, taking 10 grand and growing it to 100 grand, that kind of compounding. And that happens as stocks, as your investment just gets left alone and you let it grow, or you just take a portfolio, make it larger and larger each year through appreciation by making the right investments, selling at the right time. And that is what I'm thinking about late at night is, now that I'm tired, I've been working all day, I've been tracking the market all day. How can I have my money work at night? I don't know if you guys ever ask yourself that question. I encourage you to ask yourself that question and figure out how to make your money work at night. All right, so let's keep going here. So social media is doing well. And, speaking of which, let's see what's going on with Reddit. I thought it was doing well today. So it's Reddit's not had a very good year in 2025. It's down 36%. But I mean, I really believe in the Reddit business. Over the 5 day, it was really just sold off 10% in, what is that, 2 days of trading? Man, that is tough. Or is that one day? But since it kind of hit that floor, it's up nicely. So it's, which Reddit are we going to see going forward? I believe that Reddit is going to be worth a lot more in the future. Their fundamentals are there. I think the potential is tremendous for Reddit. So I will gladly buy shares. I try not to buy shares when a company IPOs because you see a lot of this type of like volatility. I like to see the company operate for a while and then I buy. And I like Robinhood is an example. I didn't own Robinhood when they IPO'd. I let it kind of settle down, and I've been investing in Robinhood for some time and doing well with it. I can name a couple other stocks, like Coinbase is another one. I didn't buy it when it IPO'd, but now I'm doing really well with the stock after it settled down. And I think, Reddit's kind of settled down. It's a good time to start accumulating shares in a smaller social media company that I think has a very unique proposition to its users and people, I guess, Redditors. I think it's a very sticky app. And I think the marketing data and the marketing the paid marketing on Reddit is more expensive than the stuff that you would pay Netflix, which is just putting commercials out there for people to watch when they're watching movies. Reddit, you can be very precise and advertise if that subreddit is talking about Toyota cars, Toyota can market to that clientele. Very precise. So Reddit can probably charge Toyota or maybe Toyota's competitors to market to that subreddit. That's where the money is made for Reddit. So Reddit's doing well. And then Meta, of course, is having a good year again. Meta's had a really turn of events, right? You started the year up 25%, just on a tear. And then the market started selling off, violently, and it went down 30%, 34%. And now the stock is up 32%. It's like, man, it is up, down, up. But overall, this thing's a winner. This thing is a winner. 33.8% over the 5-year, 185. When you measure from the bottom of 2022, this stock has been on a tear, 600%. Beautiful. That's what we want to see. We want to see this. This is the kind of stock that will work at night for us. It'll work all night. It'll take our money and it'll increase it in value. That way, we own more equity in this company through price appreciation. So that's what I'm talking about when I say find stocks that are going to work all night for us, 24/7. Companies like Meta that are just going to expand our wealth. Take our wealth and multiply it times 6 over the course of 2.5 years. That's the art. That's the science. That's what we're trying to do in this channel, is find good companies with great stories, great fundamentals that are discounted, buying them at the right times, and then watch them go. I think Reddit is going to take its own journey, but I wouldn't be surprised if we're sitting here a couple of years later and we're like, it's gone up 100, 200%, because they have a unique business, and I think that business is really valuable. Then the last one we'll cover is our friends at Google that haven't had the greatest of years, but they more recently have been doing really well. For a while, it's just Google's kind of had this problem with the market where it was sold off 29.4% for a couple months, but more recently it's gone up nicely, 18.7%, and very recently it had a nice run last week when everything else was falling, and it was after they had their big presentation, their I/O presentation, where they really showcased everything they have in AI and all the technologies they have, and they showed that they're in the leadership position in most all categories. And if you consider that, if AI becomes this big thing, Google is going to have a great place at the table there. There's no doubt about it. So I think investors have realized that. Investors are jumping in to Alphabet. Today, what did they do today? They were up 2.59. It's a nice continuation to what they've had. I guess the last month has been pretty good. Since May 7th, they're up 13.8%. That's really good. Nice 20-day run for Google Alphabet. So this category has been doing well. Social media, the media companies have been doing well. Even Disney, which is in this category, has had a good month. So you're right that this is a good category. And, a long time ago, they used to think that Disney was recession-proof because people, even though there would be a recession, they still want to go to the movies and get entertained. In this case here, this stock's up 22% in just a couple weeks. So Disney's been working, Netflix has been working, Google, Meta, and I think I'm really excited about Reddit. So good place to take a look at. And those are the kind of companies I like buying instead of like beauty products, because I really don't understand beauty. All right. Cool. Great. Glad you're in Reddit. Man, we keep picking up viewers. We're at 29. Thanks so much for joining, everybody. We are taking a look at companies. My point of view is to find companies that are discounted. You can call me a value investor. I'm more of a fundamental investor looking for stocks that are discounted. and trying to buy them at a really good price. We have an active week where we have had a couple earnings, but the big one is tomorrow. All right, so let me go ahead and open it up. Any other questions you guys have? And go ahead and pop them in the chat. I don't know if you guys are keeping up with basketball, but I think the Knicks are playing the Pacers. I'm not sure who's winning. Looked like the Pacers really showed up to play. And once I'm done with the stream, I'm going to go catch up with that game. So tomorrow, I've got a stream planned for 1:15 Pacific, 4:15 Eastern. And it's going to be to cover NVIDIA. And man, it's always tricky to try to predict what's going to happen with NVIDIA during earnings, because it has some of its worst days have been coming off of earnings. And look at this volatility. Boom, dropped. Really strong drops. It's not a very smooth stock. It goes up and down. You get a lot of retail investing. Not a lot of super investors are in NVIDIA. Let me show you. So the floor on NVIDIA is not very solid. A lot of super investors already left NVIDIA. There's more investors in United Healthcare than NVIDIA. But there were some big investors, like Tepper is reduced his position by 55.88%. I know Druckenmiller, he completely sold his NVIDIA. A lot of big investors sold NVIDIA. They're like, okay, we're out. We don't think it's got much more gas left. Oh man, your Warriors made you cry there, Tony. Yeah. Well, I root for the Clippers in LA. I guess I was crying a round before I think you guys advanced beyond where the Clippers got. So, so it's going to be tough to predict where NVIDIA is going to go. Not a lot of super investors own it. There's a lot of selling. You see 34 sells. So a lot of people are thinking NVIDIA's priced fairly high, and we'll see how it goes. So join me if you can tomorrow at 4:15 Eastern. It's already listed on my channel. It's a stream that we're going to have tomorrow. We'll go from there. All right, guys. Well, thanks a lot for tuning in. I appreciate it. I'll keep it short and sweet tonight. Thanks for showing up late. And one last just reminder, if you'd like to join the channel, I'd appreciate it. You can just visit the home page and click the join button for more details. And you can get the details on my channel, being a member, all the things you get. All right, guys. Well, have a terrific night. Let's see how it goes tomorrow with NVIDIA earnings. It is going to be a big day. It's going to be fun. It feels a little bit like a playoff game, maybe a Super Bowl-like kind of stock. And we'll see how it does. Thanks so much for tuning in. I appreciate it. Everybody have a good night.